As far as Bitcoin, I was impressed by the resilience it showed over the weekend.
Do you think that we can go from 115 to 180 in, let's call it 2 months?
I think so. I did make that prediction in April when it was at 75,000. So I'm halfway there. So I don't look like a complete fool. But I think there's some things underneath. Obviously, this recent poll just proved to us that leverage is a dangerous drug, right? And it really kind of just collapsed some of these altcoins. But as far as Bitcoin, I was impressed by the resilience it showed over the weekend. Normally, when something like this happens on a Friday, by Monday we're freaking out even worse because the market doesn't close, it's thinly traded. It held pretty strong in the 115 zone. It's dipping a little bit again this week. It's soft. I kind of think it's like the washing machine, like that after it does the original clean and then it kind of soaks everything before it hits the spin cycle. It's kind of like that moment where we're going to be a little bit sideways for a bit. But let's not forget, there's still race to reserve happening all across the world. It's not just the US here, but all kinds of countries are trying to say, okay, I need to counterbalance my overall balance sheet with some hard assets like crypto. As they've done with gold and oil before as a strategic reserve. You add that plus the treasuries, the groups that are going basically full tilt as a digital asset treasury company, following in Saylor's footsteps. That's another piece. But then you and I both know, we've been through enough cycles. There's this retail FOMO that happens, and there's a price point where it hits. I thought we were going to see it last week when we touched 125, 126, when we broke new all-time highs. I think you get into that one, it's a psychological 130, 135, and all of a sudden you're off to the races to 150. And then from there, that's what the cycles do over time. And never forget, having happened and the impact of, I think we will start seeing some supply constraint for sure by the end of the year.
How do you pair those two things together?
In being in the crypto business, we notice it for sure. And great word, echo chamber, right? Because I do all kinds of stuff on X now. And it's everybody's talking, but are the outside new entrants coming in? And really, we're in a somewhat of a paradox. I was on NASDAQ yesterday and we were talking about, so gold's at all-time highs, silver's at all-time highs. Well, not all-time highs, but it's soaring. Stocks are soaring. Bitcoin's up strong. When does it break? Where does it break? Is it a zero-sum game still? Will one of these fall off and the others will kind of gobble up that capital? Or is it going to be a race to just even bigger capital? Because the thing we have to remember is part of why every asset class is inflated is we've pumped how much monetary supply into the system over the last few years, just like with real estate as well. So it's a difficult thing. You have to get in front of buyers in different places, and you have to really, guys like you and I are out there pushing that education standard for folks looking at it. I think you're seeing more crypto. The crypto Google search keyword is actually stronger than just Bitcoin. I think the concept of crypto overall has really taken, even though I know you and I are more Bitcoin bulls, has really taken over some of that.
Let's talk a little bit about gold. You mentioned that you guys have gold available on the platform. We've had this epic rise in the asset. I think people are surprised Bitcoin has not kept up or surpassed gold.
But you had a great tweet the other day, because I saw you had Schiff on, by the way, and I actually did a short video of, and he's a great guy, but there's these two worlds. I think they're harmonious with each other. And I think the way you put it is that if you look at it in terms of Bitcoin price, is that how it was?
Oh, yeah.
That it's actually
they
behind?
Didn't like that.
I'm sure they didn't.
They did not like that. So for context for everyone, I tweeted Phil Rosen, made a nice chart that was gold's price and Bitcoin purchasing power. And easy to say gold's purchasing power has gone down significantly in Bitcoin terms.
In terms of Bitcoin terms.
It's down like 84%. To put that in context, the S&P is up 100% since 2020. It is down 88% in Bitcoin terms.
Median house also is
Median
down.
house is down significantly. Everything's down again.
When you look at it in terms, it's a paradigm shift, right? You look at it in terms of that, is it really worth more, or is it just because we pumped so much money into this ecosystem?
Correct.
And it's all boats are rising from that.
Well, the gold bugs did not like me saying that. I think the words I used were, it's been a disastrous investment.
Oh, wow.
Priced in Bitcoin. Well,
were you and Peter in the same room when you said that?
No, it's down 84% if you use Bitcoin as the unit of account. Now, of course, there's people who immediately come out and say, well, Nvidia stock, Bitcoin is down 50%, right? So you can play this game all day long. But my point was just like, if Bitcoin is the hurdle rate, it's finite, it can't be debased, it can't be more created of it by any one person or group, then it's a pretty good measuring stick.
Yeah.
And actually, gold has gone down. And so, I don't know. It's we are brothers in the same fight against currency debasement, but at the same time, there seems to be a divide in terms of people who are 100% Bitcoin versus 100% gold. There's a lot of people in the middle, but 100%, kind of.
Myself personally, I have a little bit of all of them. So I hold every crypto asset we have because I'm the tester, right? When new coins come in, I buy and sell. I don't have a lot of all of them. Some of the
you don't have $1 million of all 87 coins each.
No, I don't. I wish. I think we would probably be retired together by now on that. But I have heavy in the Bitcoin, Ethereum, the blue chips. And having some gold and silver. What's nice about new age gold, especially like the one that we have on our platform, is it's fractionalized, so you can get it down to the 10th decimal point, just like Satoshi's in Bitcoin. And it also moves very quickly. I had some old gold at the end of last year, well, not old gold, but physical gold coins and silver coins. And I know the industry pretty well, and it still took almost 3 weeks to get them shipped out, categorized and inventorized, and then payment made and payments coming.
Oh, wow.
And that's a long time. And I mean, if time is money, that's a long time of waiting for that process to take place. With the new digital versions of it, it's all backed by physical gold sitting at a vault and a depository audited by blockchain. And then the blockchain itself is saying, yes, these coins have gone in or gone out. So that's the future of it. And I have some of that. For me, I'm not a gold bug. I'm definitely a Bitcoin bull. But I think that they are harmonious with each other. It's just, we always have to have something to argue about, right? I mean, that's America today. I was at NASDAQ yesterday, and the moderator said something about how crazy do you think it would be if 9/11 happened now, and the way the world is. Like, I mean, we all came together as Americans the day after that. But would that happen today, as divisive as we are as a country?
Bitcoin in people's retirement accounts, that used to be very controversial, very kind of contrarian. Now it's becoming much more popular. You guys are a big part of that. But also, I think the government now is becoming much more open to what can you put in your 401k, what can you put in your retirement account. The average American, I think, is very much saying to themselves, wait a second, I want exposure to alternative assets. I want exposure to Bitcoin and cryptocurrencies. I shouldn't be precluded because the government is being paternalistic and saying that for some reason they know better than I do what I should do with my money. What's interesting to me is you were telling me before we started recording, during market sell-offs, the panic sellers in retirement accounts have pretty much dissolved, completely disappeared.
Yeah, absolutely.
Explain more what's going on there.
So I think you get, when you're putting it into that retirement setting, you're thinking now decades. You're not thinking minutes, hours, or even weeks or months. You're thinking years. So if you're 40, you're going to start pulling this out in 3, maybe 4 decades, maybe even hand it down to the next generation. So you're in that mentality of when in doubt, zoom out. So when something like last Friday happens, their natural inclination is, let's get some more. This is a time to stack sats, right? And so we see over the years, there's a lot of transaction volume of $1 billion of transactions. It's actually really close to parity as far as buys and sells. But a lot of that is also people taking profits from alts, rolling that over into Bitcoin for longer term holds and things like that.
How does that play into these retirement accounts? Like, are they going to be able to do certain things outside of just the tax advantage that maybe they couldn't do elsewhere?
Well, it lowers the barrier to entry, right? So not a lot of people have enough money inside of their retirement account, unless you're Peter Thiel, to go and buy a skyscraper or get in on these large deals that have great yield. Tokenization is going to lower that barrier to entry. It's going to make it fractionalized. And we're working with groups now on how that would look, but all of that fits inside of the retirement plan. So instead of having to buy a whole farm or a whole building, you can buy a piece of it. Just like, there's groups out there like Acre Trader's a good one, that you can buy little pieces of an acre of land and you get the yield on the harvest at twice a year, those types of things. All that is functional inside the IRA. And then you got the secondary market, right? Once it's fractionalized and tokenized, now what usually is like liquidity just sits in a building for years. Now it's moving and there's a secondary market to it.
When you look at all of these users, like who is playing in crypto and doing it in a way that maybe they wouldn't be doing otherwise. And what I mean by this is, okay, so you got tokenization, you've got Bitcoin, you've got staking, you've got all these kind of different things. I'm fascinated by the rise of the retail investor.
Yep.
And it feels like the people who are coming to you are not, just putting their stuff on autopilot because some corporation told them, hey, this is what you're supposed to be doing. Like, these people are engaged, they're informed, they are probably a little bit wealthier than the average American. And they're trying to figure out, how do I allocate my resources? So like, what's driving them psychologically, you think, to do this?
Yeah, I think it's a few things. I think it's seeking the alternatives, and diversification is a big thing. I do think there is a fear of currency overall, whether they especially this year is the worst year in like 40 years for the US dollar. People don't quite click that. Like, average Joe is like, well, I still have $100,000 in my bank account, but that doesn't come full circle for everybody. It's like, well, it doesn't go as far. It goes about 10% less as far as its purchasing power in just 1 year, which is crazy. So I think that's a piece of it. And also, this isn't era where we're more empowered and like engaged than ever before. I even use the word insatiable with our clients. They want more. They want new things. They want complete control. I think like 80% of our transactions happen after hours and on weekends or holidays. So they're not really the 9 to 5 trader. Yeah, 80% of our transactions.
80% of the transactions
happening outside of traditional stock market hours.
Do you guys see a lot of people trading, or are most people just kind of buy and hold in these accounts?
So it's a mix. Actually, we have our year-end planning next week, and we're looking at that data right now for the year. You're seeing on average in a lifetime, most clients are around 7 to 10 transactions that they do. And
that's it?
Yeah. And that's it.
Oh
that's across. Yeah. But
that's like just, buying something and holding it forever.
Exactly. But that's the mentality of most Bitcoin hodlers, right? That's their thing. But there are some that do a lot. There's folks that do, there's the upper quartile, the top 20% probably do about 40 to 50 trades in a year. And they're moving things around, changing, looking at, we have 87 coins now, so they're playing different games. We did just launch staking, which I think I told you we were working on that when we saw each other earlier this year. You've got 4 different tokens: Solana, Ethereum, Polkadot, and Cardano that you can stake with now. I think the highest yield is somewhere around 8%. And the great part is you get paid in the coin that you're staking. I like this because it's not like what happened back in 22 and 23 where rehypothecation, leverage on leverage. The assets are staying inside of your IRA in wallet. They're just being dedicated to build a better blockchain and help manage the network and all the transactions. And you're getting rewarded for basically thinking long term. And that when they bring it in and then they stake, that's even another layer of, okay, I'm in this for the longer haul. Even though you can unstake whenever you want to, it's kind of like putting cash into annuity. It's going to be there for a year or two before I pull it out.
I do think actually there is some correlation between the government shutdown and asset prices. They're still, sideways to slightly up. But once you do get more access, I saw most recently, there's somebody who filed for 5x levered ETFs.
Oh boy.
That feels like maybe some dangerous things will happen.
Does that guy also own a casino?
Possibly. But those aren't going to get approved until the government opens back up, right? And so there's a lot of these things that I think you just got to wait till the government opens up, and then kind of leverage has been cleared out through these drawdowns. You open up the market and you're ready to rock and roll.
But also there's a mental psyche that I'm noticing of the fatigue of the average American with this shutdown stuff. This isn't the first one. I was just joking that Clinton had one of these as well. This is when he was answering the phones. Remember, they made the whole parody about him answering the phones because nobody was working because the Republicans had shut it down. And I think Americans are kind of starting to get fatigued of all this. This isn't really, in my opinion, if this goes on much longer, we're halfway to the longest one. The longest one was 35 days. We're at day 16 right now. If we go well past that, Americans at some point are going to start thinking this isn't a red versus blue thing. I think it's more a orange versus green thing, which is, let's not forget, everybody, even though it is the Federal Reserve and they're separate from the government itself, everybody just couples the government, the federal government as a whole. They're going to say, wait a minute, these guys can't even agree on passing a bill, which is arguably going to be the largest bill as far as a budget ever. And that keeps happening. How are they managing money? Oh, they're just printing the crap out of it. And that's why I love Bitcoin and the finite nature of it and the scarcity of it. And I think those things, they take time. That paradigm shift takes time to click. But when it does click, then you'll start seeing those Bitcoin searches start to increase again.
How does that play into something like what you guys are doing with these retirement accounts? It does feel like those stories are intertwined in a way where more people are getting access to the market. I'm assuming more people are also trying to use different tax advantage vehicles in order to benefit.
Unfortunately, no. That's that financial literacy gap that I think is driving the overall retirement gap. Yes, more people are participating than ever before, but there's a literacy gap of understanding that these tools are really helpful for you. If you're going to take and put $7,000 away every year and you want to get into stocks, bonds, mutual funds, cryptocurrency, gold, silver, whatever it might be, putting it in a Roth or a traditional, you get a tax advantage. You avoid capital gains taxes, that nasty 37% that you can get every time you sell or change assets by using these tools. Scary enough, I think they just calculated it's about $4 trillion is the total retirement gap. So how much people are going to need to retire and how much they actually have, because we're living longer than we ever have, well past retirement age. And in fact, 11,000 Americans are turning 65 every day. So we're aging as a generation. And a third of near retirees, so people that are coming up on that 65, 70, they're actually terrified that they're going to outlast their money. And this all comes back to, only half of Americans are participating in retirement plans. So yes, encouraging that they're, instead of putting it under the mattress or in a bank, not making anything versus inflation and currency debasement, they're investing, but they're not necessarily using the tools they should be using for long-term planning. Because also the beauty of putting it over in that retirement account is you're kind of locking it away from yourself. It's not something you're just going to go sell off in an emergency. It's not an emergency fund. You're locking it up for a long-term mentality.
A family of 5 boys who all somehow figured out what they wanted to do in life. Yeah, you get pretty good at arguing.
Absolutely.
It's I credit all the time. I've talked about it a million times that when I do television and all of a sudden it kind of whips back and forth, and I'm like, this was the dinner table when I grew up, right? Like it's there is something about just constantly having to defend your ideas or convince other people to do something where you just get better at it.
Yeah.
Right. And I think that is.
Are there any lawyers in the family?
No
lawyers.
No. But I think Bitcoiners are used to this, right? I mean, how many times have people? How
many times have we been called dead?
Well, just they've tried to convince someone about Bitcoin, and then there's no conversion to it, right? And so then they try again. They're like, dude, my argument's not working.
Yeah.
I got to change it. I got to improve it. I got to figure it right. And then eventually they figure out, stop talking about Bitcoin, start talking about the problem.
Yeah.
When somebody buys into the problem, then explain the solution. Right.
Exactly.
And that seems to be working.
And that's true. Well, not even at the dining room table. It's, I've been around New York all week. I went to the Museum of Ice Cream with my daughter. You put a little name tag.
It's cool, right?
It's really cool. And you put a little name tag. So I put Bitcoin Breeze as my name. And of course, all the other dads that are out there getting the old fashioned drink over at the bar in the first stop, they're like, hey, what did you think about the crash? And I was like, I don't know if you can call it a crash. Yes, it was a liquidity event, but we're still holding strong at 112, 115 right now. We're just gotten so big that $19 billion of liquidation seems large, but it's because we're such a big space now. But then you'll go, I was in the elevator leaving the hotel to come here today, and I had my Bitcoin IRA vest on, and they're like, just never going to understand that. So it's both sides. There's people
older or younger.
It was younger dads at the Bitcoin Museum, or not the Museum of Ice Cream, and then it was older folks in the elevator today.